Hey y'all, now that the calendar has turned into a new year, it's a great time to look back to see how the market did in 2023 and to also get an idea of what we can expect going into 2024. 2023 was undeniably a great year for investors. But before we look back to see exactly how the markets did in 2023, let's go back for a reminder on what the expectations from the experts were heading into the new year. According to a poll from the World Economic Forum, two-thirds of all economists expected that we would enter a recession due to higher prices, tightening monetary policy, as well as weakening demand. According to a roundup of estimates by Sam Rowe in December of 2022, strategists across Wall Street expected the S&P 500 to end 2023 somewhere between down 10% and up 10%. So the expectation was somewhere between not good and not great. The S&P 500, which makes up the largest US stocks, was up a whopping 26% for the year. And if you looked at those smaller and medium-sized stocks, those were up around 16% a year each. If we look further into international developed, which includes countries such as the UK, Canada, and Japan, stocks were up as much as 19%. If we look into emerging markets such as China, Brazil, and India, they were up as much as 9%. And despite 4 rate hikes in 2023, bonds still were up on average about 5% for the year. So, despite the negative outlook entering in the year, we ended up 2023 in a much better spot than we started. So, what should we expect as we enter into 2024? Well, a roundup by Sam Rowe shows that Wall Street strategist predictions for 2024 are expecting to have the S&P 500 end up somewhere between down 9% and up as much as 20%. Now, another positive to that is many more of those predictions are coming in on the positive side than the negative side as they were last year. But as 2023 showed, it's really hard to predict what the market is going to do in a given year. So what historically happens after a double-digit up year in the market? It'd be very easy to expect a down year after having such a good year, since we know that the market can't continue to go up by 25% a year, even though I wish that it could. And there have been 16 instances where the market was up double digits in one year, and then it was followed by a negative year the next. But as you can see from this chart from Ben Carlson, that there have been another 16 times where the market was up 10% in a year, and it was followed by one or more years of additional 10% up years. So historically, we've gotten multiple 10% up years in a row about 40% of the time. All of this data just shows how hard it is to predict what the market is going to do in any short period of time, which is why I don't recommend that you make portfolio decisions based on what you think might happen in the next year or even the next few years. If we look at rolling 1-year returns, which is taking all the individual periods of time that we could have invested for that length of time, we would see that the S&P 500 was down about 40% of the time, with the worst decline being 70%. Over 3 years, the market is down about 16% of the time, with the worst decline being about 44%. Now, just as a note, both of these worst case scenarios came during the Great Depression, but it does illustrate that the market can be down and down a lot during the short term. Now, if we take a longer term view and look at all of the 20-year rolling returns, we would see that the market has never been down over any 20-year period going all the way back to 1871. And the median return over all of those 20-year periods was just north of 8%, meaning that half of the time we got annual returns of over 8% over all 20-year periods. So heading into 2024, I feel pretty good about the prospects for the market, but as history shows us, there's always a pullback lurking. This is why I recommend that you keep your investing strategy focused on the long term. But anything that you might need to spend or you're pretty confident that you're going to spend in the next couple years, go ahead and keep that somewhere safe, because we just don't know when the next market downturn is going to come. Thanks for watching, and I hope you found this video valuable. And if you have any specific questions about your personal situation, feel free to shoot me an email.